Hello folks, welcome back to another video. Today we're going to talk about liquidity, and this is a straight to the point course. I don't want to waste any time. This is the liquidity course that will change your trading forever. Okay, so let's get started. So this liquidity is used by ICT himself. And why did I say that? Well, because I watch a lot of his video, and live trading video that he put out on the internet, his short video on YouTube, any video that he posted by in his course, especially sell model buy model, he used this liquidity. And I want you to go to your chart and see for yourself after this video. Okay, so let's get started. So the liquidity is, the first one is equal high. What is an equal high? What does it looks like? Okay, let's go. This is what an equal high looks like, right? We started by an all high created right here, and then followed by another high. And if you look closely, we have an all high, price go to the downside, right? Coming right back, close to it, and then leave a gap. You see that? There's a gaps right there. It's not higher than this. If it goes above that, that is not valid as an equal high anymore, okay? So it leaves a small gaps and it come back down. That is what an equal high looks like. Right there, okay? When it come to the downside and it take out the low right there, that is it's valid as an equal high. So you see that there's price will leave a small gap below previous high. That's what I just told you. You look to the left, you see an all high, and price come close to it and leave a small gap and come to the downside, take out this low right there. That is an equal high it created. So how to find equal high? Equal high can create it in all time frame, but for day trade, if you trade within a day period, 15-minute, 5-minute, and 1-minute equal high is the best, okay, for that use. Like I mentioned above, look for an all high and pay attention when price approach that high. If it goes near it and leave a small gap and return, it has created equal high for later use. Okay, that's how you know it's an equal high. Move on, we have how to use an equal high. Okay, reversal. So you can use it after it created an equal high, price will come to the downside and rate previous low, or meaning it take out previous low, okay, or known as sell side liquidity. You can use that as a long entry. I will show you how to trade that reversal later. Watch till the end. Okay, next one is target. After you go long, you can use equal high that you found as your target. This equal high will act as a magnet and it will attract price to it. You will see the explanation, so just stick with me, okay? So here we have an example of how to use buy side liquidity is an equal high, as an equal high, okay? So we have a high right here, you can see. Let me put this arrow, okay? Okay, let me put it visible, okay? So we have a highs right here, equal high, and you see what price do? It come to the downside. Then what? It come back to the upside. You can see leaving a small gaps right there. Okay, not yet, not complete yet. Okay, it come to the downside as you can see, and it take out this lows right here, and that's when you know that its equal high is valid. Like I said before, after we have created an equal high, we can use it as a long entry because it just take out these lows right here. And how do you use that as a long entry? Well, of course, you have to look for a market structure shift. You see that? After it take out that low right there, it coming back. This is, to me, it's not a market structure shift. You see that the wick does go above, but the body is still below this right here. You can see, so that's not a market structure shift. So it comes to the downside, and you can see that one more time, boom, it goes to the upside, and this time it actually closed above these highs right here, and that for me is a market structure shift. After that, what do we see? If you've been trading ICT for a while, you understand that. You look right here. What do you see? Fair value gaps. You see that gaps right there? You see that the close of this candle and the body of this one and the close of this candle, you see that there's a gap. If you look at a normal candle, you see that the body and the wick of the candle, it closed like this. This is not That's not fair value gap. Right here is another fair value gap, but it's not valid. Okay, so the fair value gap is the gap of the high of this candle and the low of this candle. It's not touch anything. It just leave a gap right there. And you see that price coming back to it, reject, coming back to it, and you know what to do next. You entry. Okay, just like what I said, when it comes to equal high, you can use it as a reversal. This is a reversal trade right here. And the last thing that you can use equal high for is your target, as your exit point. Okay, you see that? Equal high, exit point. You see price goes even above that, right? So you entry here, you exit here. If you want to hold that, it's up to you, but this is just, you know, the most secure way is you close right there. And that is, if you entry here, you stop below this low right here. You know, you don't want to put it too close to the fair value gaps. You leave it, you know, a little bit space, a little bit of room. That would have been an easy 3 to 1, if not more. That is an equal high. Okay, this is not just liquidity type, you know, entry. It's the whole setup. You understand the whole setup from the beginning, how it formed, and you know the whole process of get in and get out of the trade, right? Because this entry model, it gives you that full understanding of how a trade works. So I'm going to show you on the real chart real quick. So let's go. So this is a real example on the chart. Okay, this is a trade on pound USD, right? Pound dollars. So just like what I've been, you know, telling you in the slide before, we have an all high right here created, right? Price come to the downside, come right back, created equal high, right? If you look closely, have little gaps right there. Okay, it's not, this is not random. Okay, this is, it's coded to do this. It's not random, it's coded. It's not just coincident that price goes near that and then it just come back. No, it's not. Okay, so when it come back down, what is it's to do? It take out the sell side liquidity. It's take out the low, and that created a valid equal high. Okay, so after it go to the downside, a lot of people, you know, trying to sell here because they see this big bearish candle, but that's not what it's trying to do. It just come to the downside to take out sell side liquidity, come right back. What it do? Create a no high, right? Coming back, go one more time. What it's going to do here? Break that high and create what? Market structure shift again. Okay, it repeated every single time. Right here, what did you see? Right here, this low, sorry, this low and this high right there. What is that? Fair value gaps. You can draw it out and look what price does. It coming back, it going to what? Look at the dotted line. That is consequent encroachment. Look at that. This is not random. Okay, this is not random. It go into the consequent encroachment of that fair value gap. What are you gonna do next? Boom, going to the upside. Right? You know what to do here. If you entry, you can entry that. Stop. You know, sorry, your target right there. You stop. You can, if you want to be, you know, secured, you're gonna go here. You want to go aggressive, you're gonna go right there. But to me, I think leaving a good little line below this is gonna be better. Okay, that's right there is your entry, and you exit here, right at that buy side liquidity. If you want to hold it, it's up to you. Okay, but for this teaching, I'm just gonna put it right here with this buy side liquidity. Right, that is a 5.7 risk to ratio, but that's up to you. Okay, you're gonna play around with the stop loss. It's gonna be different, but the point of the videos or this explanation is to show you that it's repeat. Okay, you're gonna see this multiple times when you go to your chart and look at it. After watching this, I want you to go and look at it in the chart. I don't want you just to watch the video and, you know, do nothing about it, because you're not gonna learn anything that way. I want you to go to the chart and look for it. Okay, you look for equal high, you look for liquidity sweep. It doesn't need to take out this liquidity. Okay, sometimes it just goes a little bit below and we have a market structure shift and price is going to run back to that equal high. Okay, so after you learn equal high, let's go to another type of liquidity. Okay, so now after we look at the example of equal high, now let's take a look at equal low. So what does it look like? Well, similar to you know, equal high, it's starting in a low, but the opposite way, right? We start with an equal low, with an O low, price go to the upside, okay? Coming back close to it, not going below this. If it go below that, that's not valid anymore. It leave small gaps right there. See that? Small gap. Price push to the upside and take out this high. That's when it, valid the equal low. Price will leave a small gap above previous low. You see that there's a low. Above that, there's another low created. That's when you know it's created equal low. How to find these? Okay, similar to equal high, equal low can create it in all time frame. Okay, but for day trading, meaning you trade in a day period, 15-minute, 5-minute, and 1-minute equal low is best for this scenario, because it faster than let's say a 4-hour equal low. It's gonna take maybe weeks to be able to get an entry. Like I mentioned above, an O low, for an O low, look for an O low and pay attention when price approach that low. If it goes near it and leave a small gap and return, meaning it go to the downside, it leave a small gap and it return back to the upside, it has created equal low for later use. Okay, how to use equal low? Reversal, right? Just like equal high, we can use it as a reversal. So after it created an equal low, price will come to the upside and rate previous high or buy side liquidity. So it's going to go to the opposite side and it take out those buy side liquidity that rest above. Okay, you can use that as a long entry. Okay, I will show you how to trade that reversal later. Okay, watch till the end of the videos. Target. After you short, you can use equal low that you found as the target of your entry. This equal low will act as a magnet and drive and attract price to run that equal low. So here's an example, really easy to understand. It's perfect. Okay, so let's start with an O low, an O high, another high created. This is simply another equal high right here. Okay, but I did not highlight this one, but you can draw the line back here. You can see that this high is higher than this one, so meaning that is another equal high right there, which is buy side liquidity. Price come to the downside, and here where the equal low started, right? We have a low right there. So this low is important because that is the start of our equal low, right? You see that price go to the upside, coming right back, create what? Another low. But if you look closely, this low here, it's higher, it's above this low, which created a small little gaps right there. Okay, and then price go to the upside and take out what? Buy side liquidity. That's when you know that this equal low is valid, when it take out an all high, or in this case a buy side liquidity. After it take out that, what you look for? You want to wait for a market come to the downside, look for that low. We have a market structure shift. Really beautiful. Look at that. After that, you know what you look for? A fair value gaps, right? That low, that high right there, there's nothing in between, which created a fair value gaps. Price goes above it. Look at the wick, it goes above it, but the body of it is still inside that fair value gaps. That's when you know you have a good fair value gap to trade. When the wick goes above, but the body, look how this is not long, it just goes right there and it come right back. You see that? That's when it closed inside these fair value gaps. The next candle you can entry short, and you know where the target is. You can enter you short there and you exit right there. Okay, sell side liquidity. And of course you can hold it a little bit longer before price coming back, but if you target the sell side, you should be good to go. Okay, so that is how you trade a sell side liquidity, or in this case a equal low as your sell side liquidity, right? You can look it for short entry and you use it as target. Like I said before, this thing that I teach you, it is a whole process. It's not just liquidity, it's how you find the liquidity and how you get in and how you get out as well. So it's a whole process. It's not just liquidity. Okay, it's complete, so you understand the whole pictures. If I just told you the liquidity and I'm not telling you how to get in, you'd probably know how to find the liquidity, but you don't know how to get in. What's the point of that? It's useless. Okay, so this is how you trade equal low and equal high. Of course, watching this it's not going to do you anything if you're not going back right now, okay, after you finish the video. Go right now, go to your chart and look for this example and learn. Take note, okay? Find a notepad. If you don't have it, you can use your phone or you can use your laptop. Note it down, going back to the slide that I told you before, note it, and you can use that later. If you forget it, you can just read it and you can understand, or you just download the video and watch it multiple times. Do anything you can to learn to find this, because if you understand this, even though you want to learn another different type of liquidity, know this gonna help you, I would say, way better than a lot of people that just start learning. Because people learning liquidity, it's not the right way. I don't know what they're learning, but they just not learning the right way. And if you learn this and you understand this, you are way ahead of most people. Okay, I'm not saying this to to mean anything, but I know that it's going to helpful, because when I finally understand this, right, I just go back to old ICT videos, and this is how he used liquidity to entry and exit his trade. And if you look at his trade, it's so precise. This is the liquidity that he used. Okay, so I'm not gonna go with the equal low example with the real chart. That is your part. Okay, so that's it for today's video, and I will see you guys in the next one. Subscribe and like this video, because that's gonna give me a little boost of motivations. Gonna make more video for you guys. Thank you so much, and I'll see you in the next one. Take care.